Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is June 3rd, 2013. It's amazing to me that we're already in the 6th month of this year. I want to say it's a new year still because that's how fast it seems to have gone by. The thought that we're halfway done with 2013 just is astounding. However, we're at a new day in the markets. Typically, the tradition has been, and this theory has lost a little bit of its zeal over the last year or so, where it's not as dependable. But if you could date back about 5 years, the first day of the trading month tends to be a good opportunity to go long on the market, and sometimes some of the biggest rallies of the year happens on the first day of the trading month. Today we're not getting that, and I think if you go back to like May, I don't think we had much of a rally at all on May 1st. Yeah, in fact, we sold off on May 1st. You go to April 1st, we were down that day too. So of late, it has not been a very good theory to trade off of. Um, but prior to that, though, that was one of those. It was one of those theories that you could almost it was tried and true. I mean, you just went long the last day of the month right before the market closed, and you would usually make a good run on the next day 9 times out of 10. So I still pay attention to that rule of thumb, but I don't expect it to happen like I would say a year or so ago. Um, but nonetheless, I mean, we are up today. We are up about 3 points. It doesn't feel like that though. In fact, I got stopped out of one of my positions today after they declared a dividend, and and then it ushered in more weakness. It seemed, but um, stocks in general just being very lackluster. In fact, we had one of the more wacky openings that I've seen in a long time, where it looked like we were going to break out, and then immediately we sold off, and then we popped back up again, and then we sold off even further. And now we've been rallying since the 11 o'clock hour. We've been rallying consistently higher. So we are about a good 10 points off of the day's lows. In fact, you could say it's about 12 points off of the day's lows. So it's been a good rally, but the stocks overall still have just been lackluster, and they're just they're not anything to get overly excited about. But what I want to talk about in this video, and the reason why the feeling inside me says sell your positions, get out of them, don't hold on to them. It feels like that, okay? Especially after we saw the sell off on Friday, where, and let's get rid of these Bollinger Bands. I always have these Bollinger Bands up here because I do use them a lot, but they're not really necessary for some of these videos that I do. But let's just pull this box up here and show you what I was watching last week. All right, you have like 11 days of consolidation right here in this box. And then all of a sudden on Friday, boom, the floor drops out from underneath it. And the notion was, okay, maybe we should get short at this point. But you don't want to, and here's why. You put this box over here, okay? We broke below the box right here, and what did we do the next day? We rallied, and we rallied, and we rallied, and we made new highs. Okay, we could go back here a little bit further, put this box right over here. And what do you have? You have a breach right there of the box, and then we rally higher and higher and higher and higher, higher again. Okay, so let's take it even further. Let's go back to December. Okay, so you got some consolidation here, and then you have a breach, and then you have a rally that goes higher, 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 higher. So the last 3 times that we've seen a breach out of a box to the downside, the only thing that is meant to do is go long. Now, the only difference in maybe what we're seeing today is that we're not seeing a huge jump in the prices of stocks. However, also of note is the fact that we did test this rising trend line today at around 1620. Basically, at the lows of the day, about 1622. We tested it and we held it perfectly. Now we didn't hold it here, but notice how we broke below that back on the 18th of April. We broke below, and the next day we rally and higher and higher and higher and higher, higher again. So if you're to follow that stream of thought, just because we broke below the the consolidation from Friday, that could almost be a bullish sign. So you could say, well, we're bouncing off this trend line that held pretty good, and what's to say we're not going to just go ahead and push higher and higher again? In fact, I would say it personally as a trader, as a person who doesn't really hold a bias to the long or short side just because I hold a bias because that's what the market tells me to do. If the market's bearish, then that's what I'm going to do. If the odds point in one direction, that's the direction that I'm going to trade in. So that's how we have to go about our line of work here. And when you're seeing such consistent behavior from the market when there is a breach of key support level, and then you see it rally higher, well, then the odds are that's what's going to happen again. It's going to keep happening until it doesn't happen. So I know that sounds a little cliche-ish, but you have to... there's no reason that tells us that's not going to happen again. There's nothing that says, well, this time that's not going to be the case, or this is going to be the exception. That's what gets people into market trouble all the time. You get these huge market rallies, and the market's just rallying, and you get these bubbles, and you get these excesses in the market, and they say it's going to keep on going up forever because it's different this time. Well, in the same case, there's no reason to say it's different this time, and somehow just because we breached below support that somehow it's going to lead to a sell-off. So you have to keep going with what you're seeing and what you're seeing until it doesn't happen, and then you have to take the precautions as necessary. That's what I'm trying to do here. I have about 6 positions on. We got stopped out of Southwest Airlines, and I don't know what it is about airlines, but airlines truly suck for me. I mean, I've traded DAL, Delta Airlines. I've traded that with mixed success, but it seems like LUV just always hands it to me, man. And we got off to a good start on that one, but it just, it got away from us a little bit, and the stock stopped out at our original stop loss. So, but I got one stock that honestly I would love to pull the cord on. It's just driving me nuts. Is HLIT. Now, we got off to a great start on this one, up to 640. And this is a volatile stock, so you can't be as aggressive with the stop losses as you would be on other stocks. But the chart really doesn't look that bad. I mean, if you look at it from a broader sense of things, you can see it's just pulling back to support basically right now. And so there's no reason that says, okay, our thesis for staying long in this stock is actually invalidated at this point. In fact, it's still valid, and that's why I'm staying in. And that's the way I got to look at a lot of these stocks right now. I got into KSS earlier today. It hasn't done me too well, but you can see here there's a great looking consolidation level here. Some volume that's starting to pick up there. And if it can just get over this little hump like I thought it was going to do this morning, but it did not, there's a good chance that, $55, $56 could easily be within its reach. Obviously, all of that is on the precipice of the market recovering off of the recent sell-off, and we're not going to get some kind of major summertime sell-off or anything like that. And that, in the short term, there's at least some opportunities to get long. The other thing, going back to the SPX that I want to mention to you, notice, and I always find this intriguing, okay, over the last 6 months, actually let's just say since January, because that's about 5 months, every time we've gotten anywhere near the stochastics, okay, look at this thing, the market bounces, and it's in conjunction with the breakdown through consolidation that ultimately leads to a bounce to new highs. So it's the same thing. It's the same thing we keep seeing over and over again. Look at this, touching that stochastic level, almost touching it right here, touching it, maybe dipping just a hair below. In fact, today we're actually a lot lower than we've ever been on the stochastic, but I would still say that's, that 17 range there, that's 18, that's really like touching it. That's actually the first time, I believe, on the S&P. No, actually, that's the Dow Jones. The Dow Jones actually has not gone below the 20 yet this year. That's crazy, and it still hasn't. Okay, the last time I went in there was late December. Today it is still at 23. It is yet to go. I don't think I've ever seen that happen over that long of a duration before. But SPX, yeah, it has done that. I got the two mixed up there, but SPX is at 18. I think back. Let's see here. No, you know what? I am mistaken here. I was right the first time. When it went below 20, that was back in late December as well. So my apologies. I'm doing circles. I'm chasing my tail here. But yeah, the S&P hasn't come below 20 yet either. So this is the first time, even though it's just a shade below 20 at 18, which I really consider insignificant. Say that's something to keep an eye on. Um, so that's going to do it for now. Just a quick video there. I just wanted to bring you up to speed on some of the developments I was seeing in the S&P 500 there. And if you guys have any questions, feel free to hit me up at spc@shareplanner.com, ryan@shareplanner.com, or if you're a subscriber to the Splash Zone, which I give out all my real-time trade alerts through text and email, as well as Oscar, who you can also follow at Fuinhaz, which is Fuinhaz. You can get all of our alerts real time. You can also auto trade them through Ditto Trade. That's dittotrade.com. You can get more information on that on. And yeah, they got great commissions. So a lot of ways to get in contact with us, replicate our trades, and just really be involved in the Share Planner community. So God bless you all for today. And if you have any questions, just hit me up. Take care now.